Hello and welcome to the Crypto Club and Digital Assets weekly catch-up on Zoom. It is Sunday the 13th of August 2023 and we never quite know what we're going to be talking about. Some weeks we talk about blockchain, crypto, DeFi, NFTs, ICOs, STOs, TGs, any other three-letter acronyms really. These sessions are open to novices and experts alike, so if you're just beginning in this interesting world of crypto and you'd like to understand more about it, maybe have some questions like you'd like to ask, and come along and join us for a future session. If you're running a project and you'd like to share some details about it, we've introduced our Gone in 180 Seconds session, where you have 3 minutes to talk through about your project without the aid of PowerPoints or slides or showing your screen, just talking about what it is that you're working on. So if you'd like to come to a future session, there's details on how to join the group in the link below. Do come and join us each week, as I say, 7 p.m. till 8 p.m. UK time. So with that, let's see who's going to come and join us today.
Gary?
Hello. Well, lots happening in the crypto world.
Tell me, Gary. Surprise me about it.
So I guess on the Bitcoin front, Bitcoin is hovering around, is it $29,300 at the moment? Been fairly stable. It's been channeling within about $300 for, I think it's about 4 weeks now, which makes me think that there's going to be a breakout or something shortly. And then in other news, there's Sam Bankman-Fried has been returned to prison. He's gone back to jail after the judge realized that there's potential of some witness tampering going on or something. So he's now gone away from house arrest, now in prison. Coinbase, they've got an action with the SEC at the moment. And I believe that there's a number of people who have assigned themselves on the case. I've forgotten what the correct term is. I think it's an amicus brief, which means that a number of people have associated themselves with the case on the basis it could have an impact on them. So that could be quite interesting. And then the Bitcoin ETFs are still going through the application process with the SEC at the moment as well.
Mm-hmm.
So several things happening. I was just going to take a look at, I'll pull up on the screen what Bitcoin is doing at the moment. I don't know if you follow crypto prices or Bitcoin prices,
Yes. Mm-hmm.
but you can see that Bitcoin's been fairly static around about the $29,400 mark. In fact, I think it's like 29.3 before. This is the 1 hour chart. It's been as low as 29.2, as high as what, 29.5. So yeah, about $300 trading range. Usually what happens with Bitcoin is it settles down like this for a few weeks, and then all of a sudden you'll get an explosion in some way. So it'll be interesting to see if that happens. Quite often that happens on a Sunday, in fact. So I don't think there's much going on at the moment. There's some moving around. What was that earlier on today? 5 p.m. today, so 2 hours ago, 29.3 to $100 left up. So things are happening, but not that much. I don't know. Do you follow crypto prices at all?
Yes, but normally Bitcoin.
No, with Bitcoin. Okay, yeah.
Yes, I'm more focused on Bitcoin. It's true that I know Ethereum, Replay, but just for the news, but more I'm focused normally in Bitcoin.
Okay. Well, I find for most people that's the easiest one to watch. If you think about how many other cryptocurrencies that there are, the only other one that's worth watching really is Ethereum. And
Yes.
Ethereum quite often reflects what Bitcoin is doing in terms of its trading activity in there. So, but Bitcoin still represents, I think it's about half the total market cap of crypto anyway. So if we have a look at what, see Ethereum, again, it's kind of channeling, was up to, what's that, just over $1,800, down to around, I'm sorry, 1842 up to probably 1900. So yeah, it's at like a $60 range it's been trading in. And it's been very static, similar to Bitcoin, but different numbers. So I suspect that there's going to be some sort of activity this week whether it's an economic announcement or something, and we might see something just trigger off and a bit more excitement. We should see.
But it's true that this I don't know, during last month, a few companies are buying too much Bitcoins, isn't it?
Buying too much Bitcoin.
Yes, millions. No? Why you?
I don't know. It's possible they may.
Mm-hmm.
I think certainly that there are some big buyers who are taking positions out. But I haven't seen or heard anything. But then I don't really follow that closely. So if anyone else is out there listening at the moment, it'd be interesting to know what's going on. But at the moment, there's just the two of us, so it's fairly quiet at the moment. Maybe Elena will join us shortly.
Mm-hmm.
But yeah, I'm trying to think of any other news. There was the big news with PayPal. I don't know if you saw that PayPal have announced that they are going to start offering through Paxos a stable coin.
Mm-hmm.
I'll see if I can just find the details on that. But while we're talking, that could be really big news because it's going to make it much harder all of a sudden for banks to refuse crypto-related transactions unless they start banning PayPal. So I'll just pop up on the announcement came through with PayPal the other day. So for 5 days ago, PayPal USD, which is Pi USD, fully backed by US dollar deposit, which means it's an asset-backed stablecoin. And they've announced that they're launching that. So what that means is that people will be able to use PayPal and use Pi USD for payments, which means they can kind of pay in crypto, which is going to be very interesting. So I think PayPal just recognized that crypto is becoming normal, and this just allows them access to the Web3 customers and that kind of thing.
Yes, I believe so. I believe that in one moment, cryptocurrency will be adopted for every market.
Could well be right. That's certainly the hope for many people.
That depends on the countries and governments and politics, no?
Yeah, exactly right.
And laws.
Exactly. Yeah. Hey, Elena. So you just joined us there.
Hi, Elena.
It's the group of three this week. We've got Gabriella, Elena, and me. How's your world, Elena? You've been looking at crypto or blockchain or anything lately?
A little bit, yeah, thanks. But today I came here, I wanted to talk about something.
Okay.
If we don't have any other topics to discuss.
Sure. Well, we were just talking about PayPal and stablecoins, but yeah, absolutely. Please ask away. We'll share more.
All right. Yeah, great. So a couple of weeks ago, there happened a huge event in the blockchain sphere, and it kind of went unnoticed, as far as I'm aware, in this Zoom meeting. And I think we need to chat about it. And what I'm talking about is the interview by the prominent Irish journalist Joe Dalton.
Okay.
And yourself, the outstanding British business consultant.
Okay.
And that the interview that was called "Striking the Balance Between Security and Stability."
Yeah, I think it was subtitled "Getting It Wrong to Get It Right" or something as well. Yeah. Okay. Yeah. It's a really interesting interview with Joe, and it's part of. I think we actually did it as part of South Dublin Radio, which I think he's a presenter on or something.
Southeast
Yeah,
Irish Radio.
Yeah, and it was also put out as the podcast, as you say, on Joe Dalton's podcast show. Yeah, that was a really interesting podcast interview because it started out with the intention of talking about blockchain and cryptocurrencies and the impact on future financial systems. I don't think we got round to that.
No, you didn't.
We talked about lots of other things. We talked about the freedom to do things you want, state surveillance, many things. Where it was interesting that I think one of the things he talks about is there's a concept called crossing the Rubicon, and that this goes back to ancient, I don't know, is it Greek times or something? I'm terrible with ancient history. And there was a story of a nation invading somewhere, and when they arrived with their ships on the enemy's beaches or whatever, the ship's captain set the ships on fire so that there was no way back. So there's this concept known as crossing the Rubicon, which means you've gone past the point of no return type thing. And Joe and I were talking about some of that with a cryptocurrency link and with digital assets and that, about how we actually crossed the point whereby we've already given up our freedom in terms of our identity, our privacy, and all that kind of thing. So yeah, it's well worth it. I'll put a link in for those who'd like to listen to that. It was a very enjoyable show, but it was curious because we ended up not talking about what we were supposed to.
Mm-hmm. And would you comment a bit more about this phrase, "We've already given up our freedom"?
Yeah, so it was kind of there's another analogy which is called the boiling the frog principle, and it's an old thing that how you boil a frog is you put it in a pan of water and you gradually turn the temperature up and you gradually heat it, and the idea is that you boil a frog by it never noticing that it's getting slightly warmer and slightly warmer. And so I think there's the risk of that happening with governments in how they put in place more and more control around how we do things. And it might be that they put them in place for good reason. So you look at the moment, the current banking restrictions that are in place around how much money you can spend without it being verified and authenticated and that. The theory is that is to protect you from theft and from criminal transactions. The reality is when I get to the point where I want to buy a cup of coffee and I have to validate that my £2 transaction is correct, and I have to go through two-factor authentication and everything like that, means it's too much effort, that type thing. And so what some companies are doing are integrating digital identity to make it easier to prove you are who you are, but that then means that you're automatically knowing that it's me buying a £2 cup of coffee. Now, for most parts, I don't care who knows I'm buying coffee, unless it's some of the competitor coffee brands who are spying on me or something. But what it means is that you're intrinsically linking your identity with your ability to pay for things. And that gets really interesting when you start introducing things like what a lot of central banks are doing at the moment around central bank digital currencies. And they're looking at the ability for you to be able to pay through a digital wallet. Once you start linking that in with your identity, then you've then handed over the ability to the government to control who can buy and sell things and when you can buy and sell things. And so this is where I talk about boiling the frog, that I think we've already ended up in a surveillance state where we've handed over so much of our privacy and our identity and our ability to pay things, that I think we've already gone a little bit too far. So that's my perspective anyway.
So so far that there is no way back. So should we just get comfortable and get on with our lives?
So that's exactly the thing of what you do when you realize you've gone too far. There are options available. You could rebel in some way, but in order to do that, you would need enough other people. And then you're talking about citizen unrest and overthrowing the state and all sorts of things that I don't particularly want to talk about on a recording because I want to still have a degree of freedom of travel on type things. Or you can adapt and you can accept the level of freedom that you've compromised, but say that's it. No more. We don't want any more than this. Or you can gently push back and you can look at alternatives. So an obvious alternative to a central bank digital currency is cryptocurrencies. These are all decentralized, distributed, not government managed, controlled, or filtered in any way. So maybe you can carry on with where we are with some things, but have different payment rails, different systems in place that go in parallel with them. So I see this around the world at the moment. It's interesting. Gabrielle probably doesn't get much in Spain, but there are some countries where there are kind of three economies. There's the public, legal, legitimate economy, where we all operate in. You buy and sell things normally, that kind of thing. There's the black market, which is where you're trading in completely illegal things. And then there is what's known as the grey market. And the grey market makes up a fair percentage of transactions. And this might be things like people accepting cash for payments. So you get in a taxi and rather than paying by a card, you're paying cash. Or people go to a nail bar or hairdressers or whatever. And there's this whole cash economy. But the problem is that governments tend to think of cash economies as being black market aligned. So there are multiple economies around and multiple ways of doing things. So it's all about striking a balance between what you personally think is right. There is the argument, if you've got nothing to hide, then why do you want to hide anything? The problem with that is that works providing the government of the day remains benign and friendly. The problem you get is if governments collect lots and lots of data and then a new government comes in place which has got different perspectives around certain things, then you've suddenly given them a whole load of information that could be used against you. So yeah, just live life carefully and comfortably and be good. I'm a firm believer as you do no harm, then that's a good start.
That's correct. And I think what you just said ties in very well with the next point in the interview. When you and Joe were discussing the fact that when something is free, when the product is free, then the user becomes the product.
Exactly right. So if we look at things like Facebook, Instagram, any of the social media platforms, if you don't pay to be a member of those things, then they're doing it in order to collect data on you, and that they make money out of that data by working out how to sell things to you and so on. So you're exactly right. Yeah, if you're not paying for the product, you are the product. Definitely. So, hey, we've just been joined by JT as well. Hey, Fernando.
Hey guys, sorry I was on mute.
Hey, no worries. How's it going? What's new in your exciting world?
Well, holidays. Everybody needs holidays, isn't it?
August seems a very quiet month, definitely. Yeah, I think people are taking a break.
Yeah, people are recharging. So in 2 weeks,
yeah.
They are ready in case anything happens.
Excellent. Talking of things happening, sorry, Elena, did that answer the questions that you had around that? or were there some other things? Go on, carry
yes,
on.
thank you. So it did answer the questions that I asked, but we can continue if there are no other topics.
Yeah. Sorry, JT, we're just talking. I did a radio and podcast interview with somebody in Ireland a few weeks ago, and it was originally meant to be about blockchain and cryptocurrencies, and it ended up going down a whole rabbit warren of far more about society, surveillance, control, all sorts of things. So Elena, by the sound of it, studiously listened to the interview and had a few questions from it. So go on, carry on, Elena.
So yeah, I really carefully listened to the interview, and I did my best to find the moments when you were speaking about blockchain. So, and then at some point, Joe mentioned that there already are digital currencies outside of DC government regulations for the time when we will inevitably go digital. So do you know anything about these digital currencies?
So we've already got things like Bitcoin and Ethereum and all these cryptocurrencies. And there are also I think it's about 5 central bank digital currency projects that are live, which I'll dig out the list in a minute, but so some of them haven't done very well. So there was what's known as the Naira, which is in Nigeria, which was a Nigerian central bank cryptocurrency that I don't think it's very well established. There's in China, there's the yuan or renminbi, which is again central bank digital currency that they're spreading out. They're linking that in with payment systems through WeChat and all sorts of things. Really interesting project that. And then there is the Barbados Sand Dollar. I think it's Barbados. They've got Sand Dollar, which is live, but again, not very well adopted. And I can't remember the other two, but I'll dig out. There's a really good website if you want to take a look at central bank digital currencies around the world. But I've forgotten the name of it offhand, so we can come back to that.
Okay. And do you think when digital currency regulations are imposed, will these currencies stay out of the reach of the regulations? No,
I think they'll be very much part of it. So I think that there's several things to be aware of in the kind of like the digital money space. So if you think about digital money as a wrapper at the top level, and then within digital money, you've got central bank digital currencies, you've got cryptocurrencies, you've got e-money, so that's electronic money in whatever form. We already have e-money. So you think about how if you pay for something with touch to pay or a debit card or your mobile phone, that's already digital money. So that already fits within that framework. So I think we're going to see that continue. Plus, you're going to see cryptocurrencies grow to some extent, and they're the unregulated space, but the regulators try and regulate it. And then you've got central bank digital currencies. The other area as well is what are known as stable coins. And this is where, funnily enough, Gabriella was briefly talking about PayPal, who announced last week that they're launching the ability to pay across PayPal in a stable coin. So this is a cryptocurrency running on the Paxos network, which is backed dollar for dollar, I believe, with US dollar reserve. So it's stabilized against the US dollar. So regulators and central banks are very, very nervous about stable coins. Because if you think about, if you've got digital money, there's already regulation around that about who can create digital money. So usually it's through the central banks and through their reserving and that kind of thing. there's already regulation around who can store and manage and transfer money. And that's done through the regulators, so the FCA in the UK, and various others around the world. There's lots of regulation around e-money and banking licenses and all that kind of thing. Cryptocurrency is the area where they're trying to grapple and put regulation in place. But I don't think it's actually a big enough market for them to worry about yet. Whereas stable coins, because a stable coin links a cryptocurrency to a fiat currency, you've now got the risk that if you've got cryptocurrency that is pegged to the dollar, you could potentially cause a volatile swing against the dollar through cryptocurrency. And that's why I think the regulators, and certainly the banks, are very concerned about that. And so most regulators are putting in place regulation around the regulation of stable coins, I think for that reason, because they want to be able to protect their money. So I think that was quite a long answer to say that there's going to be several things. And I think there'll be a mix of regulated digital money, which is as we know it now, regulated central bank issued digital currency, which is what's coming in with various banks at the moment, stable coins, which is what PayPal have just announced they're working with, and I think that'll get more regulated, and cryptocurrencies, which will be regulated as well.
So you forgot one.
Go on, which one?
Corporate currencies. And I think that's where PayPal is coming in. So if you think corporate
currency. Okay.
It's gonna, I think it's gonna be the next trend, yeah? So Apple is gonna come in, AWS, Amazon will come in, Google will come in, because in Europe they can already do that. Yeah, there's MiCA, and they can launch a stable coin. The interesting thing about the PayPal stable is that even if there is a CBDC launch, yeah, you could live forever on PayPal stable, yeah, without being on one of those CBDCs, because you just pay on the retailers that accept PayPal. There's supermarkets, it's almost everything. And when you want, you just convert and send money to your bank account through PayPal. Yeah, or to wallet, whatever it's going to be in the future. So, you know, I think the more companies start to launch their own stables, yeah, the more, I think, the less impact the actual CBDC's potential can have. And with that, if any big corporation, remember, these are global corporations, Apple, Microsoft, Google, if they start to launch their own digital currency, cryptocurrency, token, whatever you want to call it, yeah, then with that, plus, you know, stables from PayPal and any money operator that launches a stable, then you just could live off that, you know. That's what I've been thinking this weekend, you know.
Yeah. So what I'm wondering is how this is going to differ from what Facebook did. So Facebook, for those who don't know, a couple of years ago, they were part of a consortium to launch what was known as Libra. And Libra was going to be a form of payments that could be used within the Facebook ecosystem and various other things. So exactly as JT describes, it's kind of like a corporate payment system that was not part of the traditional banking type thing. And it's really interesting that was announced, and things went quiet for a week or so. And then the central bank suddenly woke up and went, hang on, you know, Facebook's got over 2 billion customers. If they suddenly create an ability for 2 billion customers to make payments without going through traditional banking systems, then that is quite disruptive to the economy. And then about a week later, the retail banks woke up and went, hang on, if people can start paying for things using Facebook coin, or Libra as it was called at the time, then that kind of puts the banks out of business as well. So Facebook had quite a challenging time and got a lot of pushback from US regulators on that. They then renamed it to DM, and they tried to do a kind of a relaunch in some ways. but they've now wound it down. They actually sold off the whole thing to, I think it was a Californian company a year or so ago, where they sold the whole concept off and walked away from it. Because what people don't realize is that some companies are so massive. So you think Facebook, 2 billion customers, or 2 billion members, that instantly gives them the ability to make payments between 2 billion people without it having to go through the existing payment rails now. When you look at something like Apple, so Apple's market cap, its valuation is, I think, about $3 trillion at the moment, well, last time I looked, which means that Apple's shares alone equates to roughly 3 times the entire cryptocurrency market. So the entire crypto market valuation at the moment it's $1.17 trillion. Apple alone is 3 times larger than that. So if a company like Apple suddenly launched something and they've got their ecosystem with all their phone users, all their iPod users, everything like that, exactly as JT says, that creates a whole new world. And then the other area, which is interesting as well, because the obvious contenders, the likes of Apple, Facebook, and Google, because they effectively own your devices already, whether you realize it or not. If you use a mobile phone, you've got Facebook on it, or it's an Android device, it's effectively the data on it is effectively owned by the providers. There's another area as well, and that's the likes of Starbucks. You think about where Starbucks have got loyalty points, and I think there was some like 800 million Starbucks customers around the world, and Starbucks, they've launched an NFT-based loyalty reward scheme. So you think about how you could potentially pay for things using Starbucks loyalty points. So rather than just using it to buy a cup of coffee, you could also go into the supermarket next door and pay using Starbucks points type thing. So these are all interesting ideas that the banks start getting very nervous about, because it doesn't involve banking licenses. So it suddenly threatens their market. So it was that kind of what you were thinking of, JT, when you're saying about like corporates.
Yes, absolutely. And Facebook Libra didn't go ahead, or then they changed the DM, because within the expert community, it was started to be called the NSA coin, because there were so many people coming out to say this looks like NSA is all behind this, and it looked, because the amount of information they were collecting from everyone, and it was not private, there was no privacy at all. I mean, it was really, really bad.
Yeah.
Of course, some of those guys, they moved on to other projects, they moved to Aptos, Sui, ex-Facebook guys that were on that project. They kind of found these other 2 chains, Yeah. But yes, about everything else, you're right. That's exactly what I was thinking. Imagine now McDonald's as well, with their own crypto or their own stable, charging at the point of sale whatever they wanted. If you want to buy a burger, you need to pay with our. Eventually, of course, it would be a process. Yeah, the same. I think. I think the big corporates are going to start to think very careful about all of this, and I can tell you right now, Amazon is quite serious about that. Okay.
Yeah.
And one of the things that I came across was Amazon CFO Warren Jensen has joined Ripple's board of directors. Okay. Just think about that. Ripple can provide a blockchain or the back end for any corporate out there as well, if they want to. Not using XRP, but as you know, they have a ledger and they could actually sell that technology or license that technology, whatever,
Yep.
So it's going to be very interesting, what's going to happen.
And that's where it's interesting as well, because Ripple is actually, when people talk about Ripple, they're talking about usually one of 3 things. More often than not, they mean XRP, which is the Ripple cryptocurrency, which is the thing that's been going through the courts and everything. But you've also got Ripple Labs, who are the development capability around this. and also RippleNet, which is the XRPL ledger, where I think they're doing a lot of stuff. I'm seeing all sorts. I think it was announced the other day. The Bank of England mentioned something about working with Ripple as well. And that looked like it was RippleNet based or Ripple Labs based in some way. So I agree. But equally, I've seen it with a number of projects around the world where you'll see some sort of partnership agreement with Ripple announced, but also one announced with Hyperledger and then with any number of other technology providers as well. So I think the central banks and some of the other big firms are kind of just spreading their options out, and that they're just looking at various things. So I think that the very fact there's been announcements about using Ripple Ledger, XRPL, I think doesn't mean it's a done deal with a lot of things. I think it's just one of many options that firms are looking at, or regulators are looking at, or central banks are looking at. But yeah, certainly lots of news coming out on that.
Yeah, and if you think, well, because of Europe, MiCA legislation, from July onwards, it's active, it's in place. So it's in fact is law across the EU, which means any company in the European Union can create their own coin, their own stable. I have no doubt you're going to start to see lots. There's already 4 banks in the European Union that announced their stable coin. I can see, but because if you look at the business model from Tether, I mean, just look how much money they announced, the profits from last year, in the billions, So they are thinking, wow, if these guys can do, why don't we just print our own stable? And in EU you can, because it's legal to do it, So it's going to be very, very interesting this next 12 to 18 months. I really think it's going to boom completely, And any company can do it, not just banks. Any company can create that stable.
But how does that actually work regulation-wise? Because previously, with things like Switzerland and FINMA, they named certain types of digital assets. So things like electronic money, things like stable coins, things like cryptocurrency, and they were putting in place particular regulations now. Because I can't imagine any central bank, or certainly not BIS, which is the Bank of International Settlements that looks after the whole interoperability and that kind of thing. I can't imagine they'd be too happy about banks beginning to issue their own stable coins. Because
there's nothing they can do. As long as there's nothing the regulators can do. You enter into law. Every country in the European Union has 18 months to implement it. There's an 8-month gracing period, like
Right.
And it means, of course, there are strong regulations. So the law created for that specific just stables is quite comprehensive, So of course, not everyone can just create just like that, There's a lot. There's liquidity. I mean, there's so much stuff behind it, That's obviously the entry level is quite high. Yeah, a bank has all the characteristics because they already are custodian of a fiat, not digital. They already have customers. They have the systems. They have the payment systems. They have pretty much everything. So for them, it actually makes sense. But the regulations say that they can't mix that with the main core of the business. So if they spin a separate, custodial service that has another separate company that handles the issuance of the stable. So that's clearly well defined the things that you need to do. You can't mix custodial as well, for example.
Yeah.
So it is there. So they can't stop it. Which is very interesting. If you think about the repercussions of that, it's massive. Of course, it's not tender. It doesn't mean that it's going to substitute the euro, but for sure it is there. So,
it's going to be interesting to see where that actually gets tried out in any way, and what the benefits are for the banks who do it. I can understand using it as like an interbank settlement mechanism, but then you're going outside the realms of things like SWIFT, which most of the banks are members of anyway. So unless it's for some of the neo banks who may not be part of the SWIFT network, who want the ability to make payments and cross-border settlements and that kind of thing, I'm not kind of sure as to what the appetite for that will be, but it'll be interesting to see.
Yeah, I mean, it might be that they will take a step back, but for now, yes, anybody could do it. We can provide swaps from cryptos, all of that. I just don't think stables you can actually offer it at the point of sale. I haven't seen anywhere apart from those BitPay terminals, point of sale terminals that can take, I think, US Bitcoin. No, I don't think it's BitPay. BitPay doesn't take any stables. Or that doesn't. Sorry, I'm confused already. The last time I looked at it was like 1.5 years ago. Sorry, guys. But for sure, I could see exactly what you said. Yeah, but I can actually see going a bit further. The big corporates, if they launch their token, they're going to start to offer as well any stables that they choose to offer as well for payments.
Okay. The interesting thing would be around settlements and intercompany transfers and that's where it gets curious, where all of a sudden, if you're a corporate which operates across the globe or around Europe, and you do bank transfers between your various accounts, then if you could do that through a stable coin instead, could you achieve that without incurring so much costs? I don't know. It's an interesting area.
For example, what happens today, I know a lot of people that pay their salaries to their employees, in stables. Okay. Mm-hmm. So what they do, they go through one of these companies out there, have a debit card, credit card, maybe Crypto.com, maybe Binance, whichever card, not in UK, at the moment, but when Binance was operating in UK, for example, and this happens with every exchange, as long as they have a service provider, you can just send your USDT and convert to fiat and send it to your bank account. So my point is, it doesn't really matter, because in the end, is that intermediary in the middle. Doesn't matter if it's PayPal, Crypto.com, Binance, a bank. Mm-hmm. It doesn't really matter. Yep. It is there. You can live all your life in stables, and then if you need to pay, I don't know, your mortgage, your rent, or whatever, you just send it to your main bank account, whatever it is, or a wallet, if it's going to be CBDC, and that's it. Mm-hmm. So it will not have much impact in a lot of people, because the CBDCs would have to stop completely every single cryptocurrency and every single stable. And in Europe, it actually became law. So they can't do it anymore unless there's another vote to cancel all of that. Yeah.
Okay.
Which is fascinating if you think about that,
Yeah, I think it might be something as well. Like sometimes you get these regulations and legislation that get put into place that sometimes have slightly different consequences to what you think of. And I think you're right, that it might be that there's something in there that we hadn't really thought of, that some companies, Revolut or somebody might now be thinking, oh, this provides us with a great opportunity to do something a bit differently. So I'd imagine the challenger banks will be looking at this with great interest, because it could give it a good opportunity for them. Well, you say there's about 4 banks that are exploring it at the moment?
Sorry, I was on silent. I said I was saying that there is about 4. I read about 1 month ago, and I think one was from Germany. So it's going to be really, really super interesting. I want to understand a bit more. Look, do you remember around 2000? I don't know if you came across, but I came across quite a few. 2012, 2014. There were a few companies that were just creating banks in European Union,
Mhm.
like
Yeah.
small little banks, and then they will sell it for 10, 15 million each. Yeah.
Yeah.
So there was like 4 or 5 guys, at least one company, they're super experienced banking guys and in regulations, they knew exactly, it was a template. They were just creating a bank, operate, get a license, once they got the license, it took usually between 2 to 3 years. They will sell the bank between 10 to 15 million euros. There was a lot of people that were looking for banks, for a simple reason. They already had a license, they already had the SWIFT code. They
Yeah.
had the credit and debit card associated. So there are now big companies in crypto that already asked me if I know of any bank for sale in Europe. So I think
Okay.
that type of business is going to boom again,
Okay.
because
Yeah.
many people don't have that experience, and it's hard, as you know, to create a bank, and get a license and all that.
Yep. Yeah. And I think that's the thing, though. You're effectively taking off the shelf a pre-regulated entity which has gone through all that pain already. There is a lot of value in that. I wonder if there'll be a resurgence then of like Lithuanian banks, because was it Lithuania, Liechtenstein? Trying to remember.
Estonia as well.
Estonia, yeah. And one or two. I think there was one in Luxembourg as well, who were kind of being quite innovative in this area. So yeah, maybe we'll see them gain an interest again with the stablecoin side of things. All right, well, thanks for sharing that. We shall see where it goes. And before Elena asks, NSA stands for no such agency.
Okay, I was wondering. Thank you.
It's actually the National Security Agency in the US. So one of the intelligence agencies, but it's jokingly known as no such agency.
Lena, is where this conversation is going to end up.
Yeah,
all the conversations in all American tech ends up there, basically.
Yeah, that's why I always say that it's like WhatsApp and Zoom and Telegram. It's just a matter of which security agency you want to know you're talking about type thing. So yeah. Okay, well, it'd be interesting to see how that develops over the next few months, really. Because you say that they've got, is it 6 months to implement around MICA now? Because it's actually been enacted.
No, it's actually July became in effect. So now member states have to start to vote and implement, not vote, actually implement, yeah. Okay. And they have 18 months. So there's a kind of for companies as well, for all operators that are on the card, there's a grace period of these 18 months from July onwards, yeah.
Okay.
Oh, I don't know if it's from July or when it was voted in April. It's one, I can't remember where the 18 months start to count, yeah.
Okay. So certainly, again, it's worth for anyone who's interested, check out EU MICA and stable coins. I was having a look in the background. There's a few notes about it. We're saying that the EU regulators have issued some guidance before MICA became in law, or certainly I can't remember now. It's regulated within the EU. Then each of the member states then have to enact that as law. So yeah, interesting. Keep an eye on the European Banking Association. Then I'm sure they'll be announcing more things in due course. Okay, so folks, we've got about 10 minutes left. Has anyone got anything else they'd like to ask or share or anything? Any other news or questions?
I've got no news, but if you'd like, I still can ask something.
Go for
it. So as while you and JT were speaking about big companies possibly launching their cryptocurrencies, I was wondering, do you think if Apple, Facebook, and so on do that, and then do you think this will really help to spread the mass adoption, and that people who don't know about cryptocurrencies will finally start using it?
Mm-hmm.
And do you think these people will continue to ignore security? Because that's also a question from your interview. Well, not a question. You mentioned that most people only care about their apps being simple, easy, effective, but secure always stands on the last in the last place.
Yep. So I'll offer a perspective, and I'm sure JT will have some things on this as well. So working backwards, yes, people typically trade off convenience to security. You can have something that is incredibly secure, but is quite difficult to use. And so that's where people start taking shortcuts and that kind of thing. And there are a few ways around that, but not generally adopted. So yes, security and convenience are always a kind of a trade-off. And people tend to go for convenience until it gets important enough to them. Mm-hmm. So, losing a few dollars on a transaction is neither here nor there to most people. Losing a few $1,000s on your bank account could be quite important for some people. Losing a few $100,000 to some people is going to be really important. So the level of security can depend upon the risk and the risk tolerance of the individual and that kind of thing. In terms of all of these things going on, will it lead to a wider spread adoption of crypto? Then I think yes, simply because it will be harder and harder to even realize what the difference is between a central bank digital currency, digital money, cryptocurrency, stablecoin. It'll all just blur because you'll have it all on your mobile phone in a wallet, which is effectively people have already got like a wallet on their phone at the moment. It's usually called a banking app. So they'll have their HSBC app, whatever, or their Revolut app, or their Barclays app, or whatever else. And I think it will just give them access to a whole range of things. So you look at Revolut at the moment. Revolut, I used to enjoy the fact that I could go anywhere in the world and I could immediately pay for things in local currency. And half the time, I wasn't even sure what local currency was. And so it doesn't matter. It could be dollars, dirhams, pounds, whatever. And I think it'll be the same with crypto, that we'll get to the state where you'll have an application on your phone and you may not even know whether the funds are being transferred through digital money, the Bitcoin or whatever they want to call it, whether it's normal traditional money or crypto. So I think there'll be adoption simply because people won't notice the difference. I don't know, JT, you got a view on that, particularly on the security side of things?
Yeah, sure. I mean, look, it's a balance, like you said, about security, And but I think the future should be diverse, mainly because there are so many people interested now in crypto, yeah. And if we have almost everyone going and buying Bitcoin, and Bitcoin achieves a totally different level. I mean, let's say close to $1 million each Bitcoin, it becomes quite risky for everyone that is on it, So I'm very much about diversification, and I think people should diversify, not put all their money in the same place. It actually becomes riskier option, just in case something goes wrong. Imagine there is now $20 trillion in the Bitcoin, because everybody came, all the big funds, all the big families, everybody got a slice of it. And the full market cap, the total market cap is $20 trillion. And then someone, comes up with a quantum computer that can destroy all the encryption and security in Bitcoin and finds a way to get all the Bitcoins off chain. Yeah, that destroys completely, totally. And I think that's the massive risk that we experience. So I think it will be, like you said, a mix of digital money of all different kinds, and it should be, and everybody should be pushed for that, and not just a couple of them, having the majority, of the full financial, how should I say, what's the right word? Spread, because it is about really making sure there is no massive risk. And
Yep.
I think we need to move away a little bit from the traditional cryptocurrencies, or instead of going like the Bitcoin maximalists, they all go in Bitcoin and that's it. They don't have any other cryptocurrency.
Yeah. In fact, Elena may notice I just pulled up on screen some statistics where it's estimated over 420 million crypto owners around the world. And, the USA with 46 million, so that's about 15% of their population. India at 27 million, so that's 5% of their population or something. So it's growing. And I think we're going to see more and more adoption. Particularly, we take a look at Asia. Asia, 260 million crypto owners. So Vietnam in particular, those popular, Philippines, that kind of thing. But also there's potential of things like South America and Africa as well. They keep talking about the unbanked world. So I think there's a lot of opportunity for continued growth yet. So we'll see anyway.
I actually don't believe in that number, to be truly honest. No. I think it's too many. I think there's maximum about 100 million users.
Okay. Yeah, and I think it might well be they're just counting the number of wallets and not counting the number of owners of wallets.
Exactly. And what is a user? If somebody came on time and traded one Dogecoin, that's the definition. What is an active user? One time a week, one time in a year. So,
That's a good point to finish off at that. So, great question, Elaine, about where we're going to go, and are these various initiatives going to enhance crypto adoption or go against it? And me personally, I think it just adds to the mix, and it provides, as JT says, it provides more diversity then as well of different options, which has got to be a good thing. So, as I always say, that when you end up with only one option, it's not an option. Yeah. And it's always about having options and having diversity.
And risk. Don't never forget the risks.
Exactly right. So folks, we're going to have to finish off there. An interesting discussion. I hope.
Thank you so much.
A pleasure. So thanks for coming along today. Anyone who's watching the recording, come and join us next time. Have a great day, everyone. Bye for now.
Thank you.
Bye.
Bye.